Dear viewers, sentiment in the crypto market is slowly turning positive again. It's not quite a major upward breakout yet, but the trend is there. We already saw this morning that Bitcoin broke through the $66,000 mark. In the next few minutes, I'll be talking with Oliver Michel from Tokentus about the economic data and signals currently coming from the US market, as well as what else lies ahead for us this week. It's great to have you here, Oliver.
Hello.
We've got quite a bit to work through, but you can always tell just by the look on your face when you walk into the trading floor how things are going. I rarely even have to look at the ticker. You're in a good mood this morning. With 66,000 US dollars, that's certainly well deserved. What we've seen over the past week is that for over a week now, we've once again had to deal with these military strikes between Iran and the US on the market. And you get the sense that the market is starting to show some resilience regarding this issue. The focus is more on last week's inflation data, which showed a decline. That should help create a slightly more positive mood for now, right?
Yes, that's right. We've seen that in the market too. As you said, this US-Iran conflict really boils down to the price of oil, and the price of oil affects the dollar, and the dollar in turn affects the price of our cryptos. That's basically the chain of events that gets set in motion. But basically, Johanna, the major US indices are in correction mode these days, just as we'd actually hoped before the final surge upward, gathering strength, finding a bottom, building a foundation before things move forward again. On the one hand, on the other hand, we have our cryptocurrencies, of course, and as you already mentioned, they've been boosted by the lower inflation figures. Bitcoin, for example, saw a nice jump of 4.6% last Tuesday. So following our interview, it shot up, and the longer you look at it, the clearer it actually becomes that the bottoming process is more or less complete. Day by day, it actually gets a little more certain. The likelihood keeps growing, and that's actually a positive thing, a great sign.
Of course, we'll take a closer look at the charts for Bitcoin and the altcoins in a moment. But I think I heard you say, albeit quietly, that this is actually positive. We'll look at the inflation data and, of course, the impact on the market, or rather, the market's expectations regarding the Federal Reserve's plans. We've already talked about this. Low inflation, that is, falling prices, is, at first glance, naturally positive when it comes to interest rates. But if you look at the bigger picture and the long-term effects, there are two sides to the coin, including a negative one. But the fact is, we've seen that producer and consumer prices in the US were significantly or quite a bit lower than expected.
Yes, the emphasis is on the whole thing. We got the CPI data last Tuesday. Last month saw a price increase of 4.2%. The expectation was 3.8, which was already a bit of a downward revision, and the actual result was 3.5. That was a great result. And the same was true for core, that is, excluding food and energy. 2.9, 2.8, 2.6, that's a great series too. The same goes for the producer price index. We had 6.5 last month. The expectation was a 6.2% price increase, but there was only a 5.5% increase on the producer's side, and the same applies to the core sector. Those were great numbers, and as a result, as I already mentioned, Bitcoin gained 4.5%, and so did our altcoins, of course. Falling inflation, that's what everyone wants. Why is that? You already said it, because then the likelihood of an interest rate hike takes a back seat, and you can see that here too, July 29th, so next week. There's an 84% chance that nothing will happen at the next meeting. Then the market expects a rate hike, but even here it's a toss-up, 50-50. So from that perspective, we'll just have to see how things play out. But basically, these figures have gone a little way toward easing the market's fears that we'll now see dramatic, sharp increases in interest rates. And that was, of course, great news, especially for risk assets, which include our cryptocurrencies.
Of course, falling inflation or a decline in inflation is, on the one hand, always linked to the fact that oil prices have risen so sharply due to the renewed escalations. And for consumers themselves, falling prices are, of course, more welcome at first, just as they are for market participants, who then hope that interest rates won't rise so quickly. However, as we already discussed in our previous interview, the whole situation shouldn't be viewed solely in a positive light, because when prices fall so sharply, it's more of a warning sign for the economy. Why?
That's absolutely right. We don't have food or energy here. So there's that, oil in there, and the moment you take it out, you see that it's also fallen. On the one hand, and obviously that's a good sign because of interest rates, but as you said, we've already discussed this several times. If you look behind the scenes, falling inflation isn't a good thing. Because the moment prices fall, you ask yourself, why are they falling? Why? Because business owners want to bring their products to market. Of course, they'd prefer to sell them at higher prices, but they can't do that because consumers are no longer able to pay those high prices due to unemployment or lower wages. So, to move their goods, they have to lower prices. And that naturally slows the rise in prices. That is inflation. We're heading into disinflation, and that's why I've said several times already, falling inflation is a lagging indicator. An indicator that shows, in hindsight, that we're actually already in a slowing, declining economy and have reached the final phase of this economic cycle. So, as a result, a look behind the scenes tells a different story than what the market has quite obviously priced in here. And the moment it becomes obvious, then it's clear that we're more likely to see interest rate cuts. Namely, when the government and the Fed say we have to save the economy. And then, in my opinion, we're more likely to go in that direction. We've had that 2 or 3 times in the past where people have speculated in that direction. I was worried about this trend, and then suddenly the Fed stepped in and intervened massively in that direction. And the icing on the cake was, of course, the post from Donald Trump, who thanked 2 major supermarket chains that, at his request, advice, and urging, lowered the prices of 300 products for hardworking Americans. And I asked myself, how stupid do you have to be? They're not lowering their prices voluntarily just because the president says, please do that. Rather, as I said, they want to sell their goods, and consumers simply aren't able to pay these high prices anymore because they're struggling. And if the consumer, who drives GDP growth, is struggling, then GDP, or gross domestic product, will also fall, and that's how we'll slide into a recession. This is exactly what we've been saying for months, even years, and we've backed it up with evidence.
Well, now you're not allowed to enter the US either, I'm telling you. Of course, there are a few other things we should keep an eye on. You already mentioned Donald Trump's post. We've also discussed that here at Crypto Insights on our Telegram channel. The same goes for the unemployment rate and the number of people not in the labor force, which has risen more rapidly in the US than ever before. But those are just a few examples. We're, of course, keeping an eye on what else is in store for us this week. We're right in the middle of earnings season. That means we're naturally focusing on tech stocks and also looking very closely at how much investment is actually planned for AI. All of this, of course, ties into the potential rotation. In any case, we have Tesla and Alphabet on our radar tomorrow, midweek Wednesday, with their second quarter results, followed by Intel on Thursday. And as we've already mentioned, the conflict between the US and Iran still hasn't been resolved. They're apparently holding talks now with the help of some mediators. So things are moving forward, but there's still no breakthrough. We also touched on the US government shutdown last week because at the end of September, we'll once again reach the point where federal funding in the US could be frozen and spending halted. And then in November, there are Donald Trump's upcoming midterms. These are risks that we're naturally keeping a close eye on, and the market will reflect them accordingly.
Yes, it's important to me to use this slide to once again convey to our audience this ambivalence. In the short term, everything looks good. Falling inflation, which alleviates fears of interest rate hikes on the one hand, but there's the other side. That's positive in the short term and has positive short-term effects. But in the long run, this game will be lost because of what's happening behind the scenes, which is why prices are falling.
We've seen recently that there has been a real streak among the US indices, a real streak of consecutive all-time highs. Every Tuesday we'd be here and there would be yet another all-time high. That streak now appears to have come to an end, at least for the time being, especially if you take a closer look at last week. Now, of course, we're seeing different degrees of correction across the US indices, some more, some less. But let's start with the Dow Jones, which has also experienced a, yes, more significant pullback.
Yes, that's right. So, when preparing for the interview, there was no need to check which US index hit an all-time high on which day last week. None of them hit an all-time high last week. Rather, as I said at the beginning, they're all in correction mode. And I'd like to start by briefly saying that we are definitely in the home stretch. We're heading into the final stretch toward the all-time highs. For me, it's no longer a question of whether this will happen, but rather a question of when these final all-time highs will be reached in the near future. And in this final phase, we should fall back on a sort of standard analysis procedure. And here's how it works. We look at the Dow because it leads the way, much like it did when the dot-com bubble burst. Then we look at the Nasdaq, which is tech-heavy because of our cryptos. Then we look at the DXW. Right now, that's simply the most important factor when it comes to giving cryptocurrencies some breathing room. It has to fall. And then, of course, we look at Bitcoin and, last but not least, the altcoins. Just as we've been listing them repeatedly in the roadmap for the past 2 years, in chronological order, and you can see here that the Dow has also corrected significantly over the last 3 days. That's quite a bit, 4.5%, just under 5% that we're seeing here. This is a correction comparable in magnitude, not one of this order of magnitude. Why do we have such a small fluctuation here, a small correction? I already mentioned that last week. The Dow is just more concentrated. It only has 30 stocks, fewer tech stocks, less volatility, and therefore a smaller range of fluctuation. But you can see he's correcting himself, he's taking a breath, he's laying the groundwork, and that's the prerequisite, that's the first step. It will lead the way when it comes to hitting an all-time high, a final all-time high. Then the Nasdaq, S&P, and Russell will follow, and our cryptos will ride that wave as well. And all of this will happen over a period of 2 to 2.5 months. We need to be clear that this is what's coming our way. It's entirely possible that it will drop a bit further from here, but it's also possible that it will continue rising directly from this point, heading into the final leg. We'll see. There isn't much time left until the midterms, and people in the US are definitely going to step on the gas again, because that's the index that those well-known US politicians will use to come out and say, we're at all-time highs after all.
While the correction in the Dow Jones was moderate, the tech-heavy indices and the Nasdaq in particular likely saw a somewhat sharper decline. What's it like around here?
Yeah, that was a huge relief. I actually described this on our channel on Friday. It finally looks more like a correction now, since we had that wedge pattern here before. And the Nasdaq was actually moving right in the middle of that yellow range, right in the middle of the wedge. And you just didn't know whether it was going up or down. That didn't look like a real correction. Now we're seeing a bit more of a correction. That's what I'd been hoping for last week. And I'd also plotted that the Nasdaq should pull back to the lower edge of this range, and that's exactly what it did. It had a few red days. It's possible that this is the end of it. So basically, in addition to that low, this low here has also formed, and that things will continue from there. But it's also possible, and that wouldn't be a problem, that it goes down a little further before it starts going up again. So those are the two scenarios I see. As always, whether the trend continues will be determined by these three retracements up here. If it breaks through there, and if it really breaks through with some momentum, then we can assume that we're entering the final leg and will follow the Dow toward its all-time high. And that's why the Nasdaq is important to us. Because this sector is so tech-heavy and the Nasdaq is so AI-heavy, we expect that once it hits its peak up here, and the first people start saying, everything's a bit overplayed now, not much is happening here anymore, I'm going to pull my money out. That the money pulled out from there will then flow over into our crypto market and accelerate growth there. How this whole correction will play out here at the end of the day will of course have a lot to do with what you already hinted at earlier. We're in earnings season, and the Magnificent Seven will report their numbers this week and next week, with the exception of Nvidia. They'll report at the end of August. That means, depending on how those numbers come out, how good they are, how bad they are, how they're received, and how they're evaluated, we'll certainly see a bit more movement here. So I'd be reluctant to commit to whether this was the bottom or whether we'll go down a bit further. We'll just have to be patient for another week or so, and then we'll know more. But then we'll definitely know where things are headed, how things have gone in the meantime, and but one thing we know for sure, this is the path to the final all-time high. But that's about it.
In the order you just mentioned, the Dow Jones, the Nasdaq, and of course the strength of the US dollar, we are now keeping an eye on the DXY. With the declining inflation data, consumer prices and producer prices from the US, the DXY has naturally lost a bit of strength initially, but as I just mentioned, we're still seeing this escalation in the Middle East, which is keeping the oil price around the 90,000 US dollar mark. That is 90 US dollars per barrel. That would be a bit much. And so naturally, when the price of oil rises, the dollar tends to strengthen a bit as well.
Yes, that's right. So this is a very important little cog. The DXY has to fall. If it doesn't fall, then our cryptos won't rise. So this correlation, it's becoming more and more obvious, and you can see that in the price movements too. We had this little resistance zone here. It had better not break through that. It should bounce off it downward on its way into this target zone. You can see it really clearly here, the two red ones. Those were CPI and PPI. That means, as you already said, inflation went down. The likelihood that interest rates would be raised and that the dollar would strengthen as a result had already decreased significantly. And that's when I thought, oh great, now it's really dropping nicely and it'll keep going like this. And then, of course, tensions in the Middle East escalated again. There were bombings, Americans were killed, and the whole thing shot back up again. So from that perspective, man, you can really see the direct connection here. The DXY reacts immediately to falling inflation. That looked pretty good, as I wrote, but even the US market, which flared up again, the DXY reacts very sensitively to that, and as a result, so do our cryptos. But I hope you can see a slight downward trend here that's moving in that direction before it. And this is important to note, rises sharply again. And that's when our cryptocurrencies will fall along with the major US indices.
Let's take a look at cryptocurrencies, starting with Bitcoin. First, here's the daily chart. We already discussed last week that you used 50% of your remaining capital to make an additional purchase, because that reduces the likelihood of a washout, or at least the possibility of a final washout. And so once again, we're left with the question that's probably driving you and everyone else crazy. Has the market finally bottomed out?
I'd answer that right away. First of all, here you can see this strong green candle on the vertical line. That was last Tuesday during our interview. That was the 4.5% increase in conjunction with the CPI data. As we mentioned in our last report, we're currently in no man's land between the resistance zone around $66,000 and the high 50,000s. It could go down or it could go up. That was the small green range we plotted there. And last Tuesday he decided to give it a try, then fell back again. But by this morning he had fought his way up to around 66,000 and even surpassed that mark this morning. So from that perspective, we're above the 200-day moving average, which is, well, an absolute success. And right now we're launching our third attempt to break through this resistance zone around 66,000. We tried once and didn't make it. We tried a second time and we're now on our third attempt, and I can definitely see us breaking through with a little momentum. And once we get past that, Joanna, once we break above 66,000, we'll surely see some kind of back test with a pullback to 66. Maybe it'll dip back down a bit below 66 and then start moving up from there. And the moment we break significantly above 66, I'd say the probability of seeing the high 50s again or a final washout day has plummeted to definitely a single-digit percentage range. So from that perspective, things are looking pretty good right now. We've got a nice upward move, and if everything continues the way it's been going so far, then I'm actually quite optimistic that we'll break through 66. Go down here in this area and then go back up. Nothing, absolutely nothing, goes straight up. That's why we do back testing. question, how far? And then in this area, I'd take a look. Depending on how things pan out, I'd reallocate my remaining 50% of capital. So here's my question. Yes, the bottom forms 166 days from now, 47 days from now. I think if we go over the 66, just to sum it up, well then, that's it. We finished forming the bottom. In principle, you could go ahead and say that the path is downward, but the question remains, how far does the backtest go? It definitely won't go back into the high 50s. And if it does, well then there'd be a certain probability, but a low one. And then it'll just keep going up. Yeah, we've broken through 66, then there's 76, then 80. So the road to the top isn't quite that easy. There are quite a few resistance levels there, and yeah, the path to the upside is laid out. 76, 80, then the 90s come into play, and then there are these two. Add to that the 50 and 100 period weekly moving averages, which have crossed here, as we discussed last time, which is a positive signal. And then the price will rise into the retracement. And that's when we'll see whether this turns out to be a relief rally or a continuation rally. There are those who follow the 4-year cycle. For them, of course, it would mean something like, if this is the bottom, then starting from here,
The good old days?
the next 3 years. And those 3 years should, of course, bring a new all-time high. And that brings us back to that scenario. But I'm still, Joanna, in the camp that believes that if the major US indices take a dip, I don't think our cryptos will be able to decouple. I can't imagine that happening, so for now, I'm just glad if we stay in this range with a relief rally, and then we'll see how far the US indices have gone, and possibly say goodbye to our portfolio.
Hopefully we still have a little time until then. In this interview, we'll also take another look at Bitcoin's weekly performance. We didn't cover that in the last few interviews. Not a whole lot has happened recently, but we're still seeing, albeit tentative, green signs over the last 3 weeks. And if this trend continues, as I just checked again, Bitcoin was at $66,200. Then we're looking at a fourth green week. What impact does this currently have on the MACD and the RSI?
Yes. Up here you can see the 3 green weeks that have already ended and the fourth one on the far right. That's the one we're in right now. Obviously that has an impact. And down here on the MACD you can see very faintly, just as you mentioned, that tiny green dot. So that means it's already shifted from the red zone into the green zone. So that means the moving averages have crossed here. Here's where we are. And of course we have to keep things in perspective. I'm talking about the fact that we'll see another uptick in the short term. Meanwhile, we're moving down along with the US indices. That means it's important that we see an upward move in the short term. And if I look at the short-term positive signals, you can see here, we're in the green. We know that the histogram reflects the short-term movement. The fact that the two lines, the MACD line and the signal line, are below the zero line essentially means that we're still in a bearish trend in the medium and long term, while the histogram indicates we're in a bullish trend in the short term. You can see that very clearly here. Here the lines were above zero. We were incredibly bullish here, but then we dipped below that level and entered a bearish phase. We're still there, and I think we'll be able to break out of it in the short term. In the short term because of the MACD, which is trending upward. But the moment we start thinking about the medium and long term and the rollout, these two lines will remain below the zero line. In the short term, and of course this bullish divergence, the one you see here, should also be interpreted in the short term. We had already plotted that out weeks ago. You can see that while the price is falling, the RSI, that is the relative strength index, is rising. And that should be viewed as a bullish sign. In other words, that strength is increasing. The price may still fall, but it's only a matter of time before it too aligns with this bullish signal, this bullish RSI movement. And we've had a similar situation before, which is why I left this purple arrow in there, because we've always had it. That was the last bottom in the final bearish phase. You can see exactly the same game there. We had here, the price was falling and we saw relative strength increasing. So there was a bullish divergence, and you can see that down here as well. It was all below the zero line. Everything was close together, just like it is here. And from then on, it sort of moved up here. And I see a similar trend unfolding, except that we're not heading toward new all-time highs. Rather, it's more likely to be a relief rally, maybe up to 110 or 111, reaching the retracement levels. And with a little luck, perhaps even further. But as for whether we'll see a continuation rally and new all-time highs, in other words, a new 3-year bull cycle, I'm inclined to doubt that at this point. That's why for now, we're focusing only on the short-term outlook that's important to us, the next 2 or 3 months. In my opinion, those are the ones that matter most right now.
Here's the chart and the corresponding analysis. But of course, fundamental news always plays an important role as well, and we always keep it on the agenda alongside the charts here at Crypto Insights and on our Telegram channel. For example, there's news regarding the Clarity Act. What fundamental news could have a positive impact in the near future?
Yes, let's start by looking back at the past. The spot Bitcoin ETF saw an inflow of $75 million last week. That's practically nothing. Yesterday, Monday, was a positive day with 227 million. And we've now had 5 consecutive days of positive inflows. That means the 75 million is made up of an incredibly bad last Monday and 4 relatively good days, Tuesday, Wednesday, Thursday, and Friday. And that's how they arrived at 75. So from that perspective, the trend is actually pointing upward again. People are buying spot Bitcoin ETFs again. That's actually a good sign, and in principle, it supports exactly what we're seeing here. The RSI is rising, the MACD is turning positive, and positive.
You just mentioned that for now you're assuming we're heading into a relief rally, and then we can still see if prices continue to climb to new highs. A question we get asked a lot, both on the channel and in the comments, is always, if we don't see a new all-time high for Bitcoin, is there still a chance that altcoins could see a more significant rise? And over the past week, or rather over the past few weeks, we've basically been looking at the resistance levels on the upside for Ethereum and XRP, but of course also the support levels on the downside. Where do we stand now?
Yes, the altcoins. I think so, to answer your question, that if Bitcoin enters the retracement range, just enters the retracement range, so up to 110,000 US dollars, then I think our altcoins, which have a massive amount of catching up to do, will hit new all-time highs relative to their previous all-time highs. I think I've said this several times already, which would actually be pretty good targets, and I assume some of them will keep going even further. All of this has a lot to do with what the Clarity Act will result in. And there's still the deadline before the summer recess. August 7 is the cutoff date. If they haven't gotten it through the Senate by August 7, then, well, we can forget about it for now. And there was actually a pretty good twist in the story last night. The whole story hinges on the question of how the Trump family is allowed to handle its crypto business. And the White House apparently sent out a package tonight. A package of ideas, proposals, and compromises on how this should all work. Eleanor Terrett published that tonight. So, this is not an official announcement, but rather an announcement from a correspondents, reporters, whatever you want to call them, but they're relatively reputable, and you can trust them. If that were the case, then I can well imagine that the only sticking point would be this. If there were a good compromise proposal from the White House, Trump aside, then the Democrats would cave, give in, and say, okay, then we're on board too. Because what we are seeing right now, and we've covered this in detail on our channel, is the Chinese are catching up massively in the field of AI and are now outpacing the Americans in some categories in terms of performance and price. And the Americans say they want to be leaders in the fields of AI and cryptocurrency. And if you look at it now, The Japanese have put regulations in place, the South Koreans have put regulations in place, the Russians are in the process of doing so, and MiCA is now up and running. This means that there are regulations all over the world that allow companies and employees to feel secure. And if they don't want to miss the boat on this issue, but instead want to be number one in the crypto sector, then it doesn't matter whether they're Republicans or Democrats. They need to make sure the Clarity Act gets passed now. And given the pressure of current events, I can well imagine that they'll still manage to push the Clarity Act through the Senate. Trump will sign it then, and then we'll see. Especially with the altcoins, even more so than with Bitcoin, a massive upward move, and that'll spill over here to ETH. With ETH, we had said that we have that strong support level on one side, on the downside, and we have this blue line. That was the first target that needed to be reached on the way up. Until this target of $1,250 is surpassed, we can't really talk about an upward move. And I mentioned last week that it had hit this level, pulled back, and it would be nice if it broke through now. If it breaks through, it's clear it'll do another back test. That's exactly what it did, and now it's trending upward. And overall, that's actually very positive. You can see that the RSI is also trending upward, so momentum continues to build. You can see that the MACD on the weekly chart is now in the green for the third week in a row. Here you can see 4 weeks that are significantly greener than with Bitcoin. So the momentum is building here, and it's very, very important that ETH, as the second largest cryptocurrency, steps on the gas and in effect pulls the rest along with it. Things are looking very good right now, and it would be great if we could stay above 11850 and break through the 2000 mark. And then, of course, the next level here is quite clear. We have to get above that. That's where we draw the next blue line at $2,400. That would be a higher high, as they say. Then it would probably go down a bit again, and hopefully it'll slowly move upward from there. That's the all-time high, $4,168, and I'm assuming that it'll break through that level when Bitcoin enters a retracement.
You're also assuming that there's still a bit more upside potential when you look at the next coin, namely XRP. Here too we have the weekly and daily charts, and here too we have the support and resistance levels. But there's still a bit more upside potential here compared to, and this isn't meant to rub salt in the wound, but rather a completely neutral observation. There's a bit more upside potential compared to Ethereum.
Yeah, well, I bought the XRP at completely different prices. That doesn't comfort everyone who bought in at a higher price, but it does make it possible to look at the whole thing a little more calmly. And you can clearly see here that we once again have strong support at 91 and 93. You can see here that there's resistance at 129 on the upside. And if I compare that to Ethereum, then we're here to then, you can see the gap. Ethereum is basically already up here, has passed the back test, and is taking off while our XRP is just still hanging around down there. So from that perspective, well, you can obviously already see a few positive days that have come up here. You can also already see that at this point, the MACD has been in the green for quite a while. Not strongly, but it's in the green zone. And but the RSI is, of course, here if you look back at a historic low. And when you're at a historic low, you can really only, to put it simply, move upward. And that's the potential that's currently built into XRP. But anyone who owns XRP and has, for example, weathered dry spells like this, and if you go even further back, we're talking about years, is naturally looking forward to something like this, and it could happen again this time. XRP moves very quickly in just a few weeks, and then for many, many weeks doesn't really budge at all. The bottom line is that we've moved past 91 and 93. The trend, the direction for Bitcoin, ETH, and many other altcoins is positive. That includes XRP, among others. And now we'll just have to wait and see what the next week or two bring. If the Clarity Act is passed, then these coins are definitely going to take off. Although, and this needs to be said again and again, XRP doesn't need the Clarity Act. XRP already has clarity thanks to the litigation with the SEC and the court ruling that XRP is not a security but a commodity. But this isn't just about XRP, it's about the entire market, and XRP has never moved independently of the market. XRP has always moved in tandem with the broader crypto market. When the crypto market has risen, XRP has risen as well. In its own unique way, but without an upward trending crypto market, XRP does not move either.
In other words, the Clarity Act isn't actually a major factor in an XRP rally. Rather, XRP will gain momentum in the wake of the other coins. In your opinion?
Yes, I already mentioned this last week. The Clarity Act as a bill isn't really necessary because the day-to-day regulatory work is already being done by the SEC and CFTC. But it's perfectly clear that if something is enshrined in law, a new administration can't simply overturn that law because it would need a majority greater than 50% to do so. And that's what makes those big investors so skeptical. They tell themselves, as long as it's not law, I'm not sure if it won't be overturned by the next government, and then I'll have invested and have to pull everything out again because my compliance department won't allow it. So that's actually the underlying reason. That's why it needs to be enshrined in law, so it can't be overturned so quickly by the next government. And that creates a certain degree of investment security, which will ensure that a lot of money flows into the market here. And of course, coins like these, all those that have utility, all those that make sense, all those that serve a purpose will benefit massively from this. Those are traded. We talked about hype on our channel these days, and I've started keeping an eye on them because they've basically shot up into the top 10 on CoinMarketCap overnight. And that's when there will be a clear gap between the coins that really make sense and the coins that are just there.
We were talking about hype. You wrote one or more detailed posts about it. When you say your next job, since there were of course a few questions about that as well, or your next shopping plan, will hype be part of it?
I don't know yet. I can't say for sure, but we've gone ahead and described it. I've had this on my radar for a while now. We'll see. We're just going to see how Bitcoin does for now, because I'm not buying any Bitcoin, but only altcoins, though Bitcoin sets the tone. When Bitcoin rises and makes its move, the altcoins follow suit, rising and unfortunately falling along with it. And Bitcoin tells me when to buy and when to sell, but I don't trade Bitcoin myself. Only to a certain extent. I mentioned 2% earlier, and the rest is essentially altcoins. It's a bit of a mixed bag. We're always talking about Bitcoin, but it's the one that determines whether the crypto market goes up, stays flat, or goes down. And that's where our altcoins move. But at the end of the day, that's where you can really make or miss out on more returns.
Speaking of investments, let's take another look at spot ETFs. We hadn't seen this last week, but for a relatively long period before that, we observed some outflows from the Bitcoin ETF and the ETH ETF, while there were actually more investments in Solana and XRP. Over the past week, the trend has clearly shifted into the green zone, hasn't it?
For all of them, yeah, you can see that here. I already mentioned Bitcoin, 75. I've already explained how they came about. Ethereum was at 105, so interestingly, it had a larger inflow than Bitcoin last week. Solana has just under 1 million, and XRP has essentially made up for the outflow from last week and the week before last. And after 9 positive weeks and 1 negative week, it's now back on track with another positive week. So from that perspective, everything looks very good and aligns with the many green candles we've been seeing lately.
We have portfolios to discuss, a frequently asked question. Yes, now some of you are asking, what about the roadmap? We haven't forgotten the roadmap. It's not falling by the wayside, and we actually always have it with us verbally with the sequence that you regularly go over here. And accordingly, if anything changes, we'll of course have the green, red, yellow roadmap with us again.
In Logtum, its schedule is
all green.
To display it entirely in green.
I don't mean to be sarcastic, but there are certain areas in past situations that even you can't turn green. Let's leave the banter aside for now and take a look at the portfolios. We actually have 2 portfolios. We have one that we set up very roughly in May 2023, and we also have a short-term portfolio that we introduced in April of this year, and we've made the additional purchase you just mentioned. 50% of the remaining capital. Let's get right to the point. You mentioned a short-term time frame of 3 to 4 months, and that could actually yield a solid return. What's the current situation? The 4 months aren't over yet.
Yes, you're basically talking about the middle range here.
Exactly.
We have 3 things that we've been playing over and over again lately to see whether what we did there was actually any good or not. I think I'll start at the very beginning with the most positive thing. The portfolio at the start of this interview series in May 2023. So we've been doing this for 3 years now, and we've taken a very low-key approach to it so as not to overdo the whole thing. Let's say we have a mini portfolio consisting of 50% Bitcoin, 25% Ethereum, and 25% XRP. That was the foundation. And if you take the prices from May, along with the start date and the status, as of 7 a.m. this morning, then we're at 103% tax-free. With the increase since 7 a.m. this morning, it might be around 104 or 105%. It doesn't really matter, but it's tax-free. So if you've invested 100,000, you'll have 33,000 euros net per year over 3 years. That's actually not bad right now. We've been up to 400 before. But you can see that if you stick with it, and this is a really key point, if you stick with it and stay the course, and since then we've not only been through significant parts of the bull market, but also presumably weathered the entire bear market, we're still up 103%. And if we're now entering a bull market, whether that's another new cycle or, as I believe, just a short-term hype before things start to fall along with the US indices, that's a very good performance, I think. To professional traders, this might seem ridiculous, but for those who invest normally and want to participate in this market, 100, I don't think 103% in 3 years is all that bad. Then we set up a portfolio for Invest in Stuttgart. That was, as you said, in April, on April 18th to be exact. And there we had identified 3 areas: the finance sector, the tokenization of real-world assets sector, and the AI sector. For the finance sector, we had Bitcoin, ETH, XRP, and Canton. Instead of XRP, or in addition to XRP, one could also
XLM?
Can accept XLM. In addition to ETH, there's also Solana, for example. Bitcoin accounts for 15%, ETH for 20%, XRP for 30%, and Canton for 5% of the portfolio's weighting. Chainlink and Ondo were real-world assets, and tokenization with 5 and 10% of the portfolio, and near and virtuals with 10 and 5%, though you could certainly add Tau to that as well, as we discussed in the channel. If you take that in relation to April 18, from the time of the presentation at Invest, where we unveiled this, until this morning, 7 a.m., we were at 7.6%. Now, with the additional 1.5%, we're down 6%. That's just the way it is, unfortunately. I'm banking on the next month or 2 quite a bit. We had said that it's a very short-term thing. You can ride it all the way through to Bitcoin's relief rally. 3 months, 4 months, maybe we'll have to add a 5th month, but the fact that we're more or less at 0 here isn't actually that bad, considering that we really did get started on April 18th. And then, last but not least, there's my purchase from last Friday, the 50% allocation. I had said XRP with a 30% weighting, XLM with a 30% weighting, and Canton with 40%. We're up 1.8% there, with this morning's gain maybe 2.8 or 3.3%. Considering that I only moved the whole story up just a little bit this week, that's actually not bad. So in that regard, those are the actual figures. Completely unvarnished, completely open, completely honest. And at the end of the day, that's ultimately what you have to be judged by. And I own all these coins. So in that sense, I'm right here putting my money where my mouth is, as the saying goes. I'm fully invested in this.
What else do you think the short-term portfolio we presented at Invest in Stuttgart is capable of? Don't go saying plus or minus 0.
No, right here. That is, at the moment when Bitcoin kicks off a relief rally, hitting 105, 110, 111, and the altcoins might outperform their old all-time highs from 2021 and maybe even go a little beyond them, I do think we could break into the 3-digit range here. And in my opinion, with a little luck, there won't be a 1 in front of that number. And the same applies here, of course. We'll see a significant increase at the top and, of course, a decrease at the bottom as well. So, we're ready. We've planted the seeds and now we're moving into the harvest phase.
Dear Oliver, I'm certainly happy for you to enjoy the harvest, especially now that we're heading into late summer. I'm curious to see how things unfold and will, of course, be keeping a close eye on developments here. Thank you very much for your comments today. Dear viewers, I hope you'll keep an eye out for it too and join us again by next Tuesday at the very latest. We look forward to seeing you.